Good afternoon, everybody, and I'll try and be short and sharp. I first of all wanted to put up this is the Thomson Reuters Bloomberg Commodity Index over the last, I think it's 10 years, if I'm not mistaken. And you can see that we had a boom when prices rose to nearly 500 on that index. We then had the price collapse, we had a recovery, but we're still really about a half of the prices that we saw at the peak. What we are seeing, we've seen a pretty strong rebound this year in that commodity index. And what it's really been, a lot of it's been about is the amount of supply being held in warehouses. So there's been a sharp reduction in warehouse stock. That is an example of warehouse stock for a number of different commodities: aluminium, nickel, zinc, lead and tin, and this has driven up prices this year. A lot of that buy-side demand has come out of China, and there's still uncertainty as to whether all that supply was put to use or is being warehoused in China. What it's really been about is, I think this year we've seen the first example of synchronized global growth across the world. Europe has been growing. I was looking at statistics, growing at the fastest level since 2011. The US has been growing, and Donald Trump is fond of telling us about that. China as well. So you've had this sort of global synchronized upturn in the global economy, and that's lifted demand for commodities and metals pretty much across the board. Just to give you a feel of what we've seen some very sharp recoveries. The yellow line, I think, is copper. We've seen a sharp response in zinc and even in iron ore. One of the biggest commodities is steel rebar. You can see again a very dramatic rise that's happened there, and this has lifted confidence levels across the board in the mining industry. I mean, you can imagine when prices are low, there's not much money available, and when prices are higher, people are willing to step in and take more risk on. But what's been really interesting this year has been the outperformance of what I would call esoteric commodities, small new commodities, ruthenium, iridium, rhodium stand out, and of course anything to do with electrical cars. So when you look at the commodity complex, it's varied. It's not just one or two items. There's been a very varied performance amongst different commodities. And then we've heard some examples of some being up 213% year to date. I mean, that's a pretty stunning performance in that case. I wanted to talk a little bit and compare something. If you look at gold has historically been considered the safe haven amongst investor assets to hold. When Ben Bernanke was asked, why do people hold gold? He said, we hold gold as a hedge against really, really bad outcomes. And that's why whenever you see a major geopolitical problem develop, typically there's a knee-jerk reaction and gold tends to rally. But this year has been very, very interesting in that Bitcoin has kind of become gold. For a lot of people are seeing it as a safe haven, and you've seen an enormous rally in Bitcoin. And I just wanted to point that out because for the first time ever in the last 4 weeks, Bitcoin is more of a searched word on Google than gold. And by the way, the amount of electricity usage going into Bitcoin mining is the equivalent of the electricity consumed by Nigeria. And also, just as another, if you look on searches on Google, for example, there's more interest in buying Bitcoin than buying gold, and that sort of crossover point happened only a few months ago. It's tangential, but I just thought it was interesting. It's widely accepted that Africa is the key to growth for the mining industry. These are comments from the CEO, I think, of Rio Tinto. He said Africa is the largest untapped source for growth for our industry, and a lot of the minerals of the future will come from the continent. Our future with the East lies in Africa, and together we can participate in this transformation journey. So what we're seeing really is, as we were discussing about Kenya, we still have a lot of white areas in Africa. We know there's a ton of it in the ground, and essentially the demand is coming from the East, and that's what this gentleman was referring to. But he was making the comment that the track record of success by the world's biggest mining companies in Africa over the last decade has been poor. Rio, for example, spent billions expanding into new African assets as metal prices soared during the commodity supercycle of the late 2000s. We're at 50% of those supercycle highs. And a lot of value was lost for the big mining companies because the transactions they entered into when the super cycle was at its peak made absolutely no sense when the price was 50% lower. Again, going back to these comments from Rio Tinto, for future projects to succeed, partnerships with African states, financiers and customers must change beyond the traditional models and include different types of joint ventures and different project financing models. Rio exited Zimbabwe in 2015, still has more than 10,000 workers in Africa. Namibia, Guinea, the Guinea story is the iron ore story, which is a story in itself. Mozambique, South Africa, Madagascar. I think, as the Cabinet Secretary was saying earlier, and he kept using the word leapfrog, I think it's a unique opportunity to construct an optical mining framework leapfrogging into the future. I think we can learn from the mistakes we can see around us. We can create an optimal structure, and I think we're looking at hopefully a real increase in our mining GDP. I think realistically in the next 5 to 10 years. Vinod Khosla, who made his money in Sun Microsystems, said many years ago, "The future's not seen in the rear-view mirror." And I still find it a powerful quote, and I want to show you what the rear-view mirror I'm talking about is. A lot of people talk about the DRC, and the DRC I've visited several times, and I remember thinking to myself, the DRC is a Brazil. That's the level of commodities, that's the size of the economy, but it isn't. And this I would describe as the most suboptimal mining jurisdiction probably anywhere in the world. And I haven't got time to go into what's been going on there, but essentially what we've seen is the privatization of state assets. We've seen egregious trades which have been done at below market value, obviously because the incentive was not in that transaction, it was in keeping that transaction as low as possible. And if anyone's interested in this, there is a ton of research that has come out in the last 12 months. So when I was saying the future's not seen in the rearview mirror, I would say the DRC is exactly the example we never ever want to follow. And the volume of money that's been lost to the treasury in the DR Congo is simply off the charts. You're talking about billions and billions and billions of dollars. There was a very good report that came out which actually tracked practically all the transactions, and you can go in and you can see it, and it's been pretty much a systemic problem. And some of these transactions were so off the market, they were like Donald Trump when he was claiming he was a financial genius and able to sell a $100 million property for $160 million. This was the reverse way around. Dan Gertler, who bought all the rights to diamonds, buying and selling and mining in DR Congo for a $20 million check, is an example. Then what I wanted to touch on is political risk, because that's become very, very front and center for mining companies in Africa. And this must be about 2 weeks old, but it gives you an example of 3 different stocks: Anglo American, Glencore, and Barrick. Barrick is, if you can see it, you can see the green one is where the political risk has been starting to filter in, but a more extreme example is going to be this. There's been a lot of discussion around events which led to this, which was where the Barrick chairman came to Dar es Salaam and essentially capitulated to a set of requirements that were presented in front of him. My question is, he was already in the country. He had all that money sunk in the ground. His was a different type of trade to a new investor coming in. Any new investor is going to look at those circumstances and he's going to struggle to get it through any sane board or credit department. I can't think of many credit departments right now or boards where you can seriously go and say to them, this is where I want to go in. I want to spend $500 million exploring something. I think that's got a probability of 0 to happen. And that is the consequence. I admire what President Magufuli has done. I think I admire what he's trying to do, not necessarily what he's done. He's trying to wrestle a bigger share for his national treasury, but at what cost? I think this is a Pyrrhic victory, because essentially, to me, the Tanzanian mining sector, except for those already in there and have invested, is currently uninvestable. For any company that is outside that jurisdiction, is in Europe or in North America, China might have a different set of rules. But I think I can't imagine the conversation of somebody who's sitting there trying to write a big ticket into Tanzania at this moment of time. And then you see the price reaction in terms of the share price. Acacia, I believe, is the mauve type color. And really, my background is from the markets, and essentially, the financial markets are the purest signal in any noise. You can say whatever you want, but when somebody says, okay, let's have a look at the share price, that is the single important message that any serious investor is going to take away. And that kind of volatility carries a price. It carries a price for the company's ability to borrow, the price it will borrow at, and it carries a price for further investments that they can make, and a lesson for others who would be looking at a similar scenario. I am very grateful to Base Resources. I'm on their board, and it's been a real pleasure working with them, because I really think that they've been what I would call a best-of-breed mining company, not only in Kenya, but in many other parts of the continent. We know that the Kwale mine represents 60% of the country's total mineral output, or 50%. And I think, it is a key calling card for Kenya as we come out of this nascent period where we're just starting our mining sector. It's a way of us to show that, look, we can leapfrog, we can create a situation. I come from Mombasa. I can tell you Kwale had very little economic activity all my childhood. Today, just go and have a look at the economic activity created not by the mine, just by the road that they built from the main road into the mine. I think our mining industry is still in its infancy, but I think Cabinet Secretary Dan Kazungu, who's enacted a new mining legislation and regulations, is looking to promote the industry as a new growth sector. I think there's an enormous opportunity. It's like a blank canvas. We have the opportunity to leapfrog into the future and make this a serious contribution to our Kenya's GDP. And everything I've heard in the last, I think it's 2 years since his appointment, has made me feel confident about where we're going. And I think also has made people feel confident not only in Kenya, but all abroad in Australia and all across the world. And with that, I leave it. Thank you.